This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Turning Point, is stock picking back? Why now may be the time to change your investment strategy. Post-election portfolio, what names should you consider buying now that we know who will be in the White House come January? And building a business, we'll introduce you to some veterans who went from active duty to active entrepreneur. Those stories and more tonight on Nightly Business Report for Veterans Day, Friday, November 11th. Good evening, everyone, and welcome. I'm Tyler Matheson. Sue Herrera is off tonight. Well, the Trump bump didn't slump, but it did flatten just a bit today, but it was still enough for the Dow to close at an all-time high. The recent run-up, powered by investor optimism that the president-elect's policies could help lift the economy, was enough to give the Dow its best week in, get this, 5 years. Today, the Dow Jones Industrial Average rose nearly 40 points to a record 18,847. The NASDAQ added 28, and the S&P 500, well, it kind of fell a little, by 3. For the week, the blue chip index climbed more than 5%. The NASDAQ and S&P were both up 3.8%. But how much gas is left in this market's tank? Bob Pisani takes a look.
Stocks lost some steam today, but that should come as no surprise after the Dow hit record highs this week. The big question right now is how long can the rally go on? Take banks and drug stocks, for example, both rallying big time this week on the perception that fewer regulations and oversight will translate into more profits for drug companies and bank companies. But these sectors can only go so far without seeing specific detailed legislation on what will happen, for example, to Obamacare, drug pricing, and Dodd-Frank regulations on banking. Drug stocks, for example, were down today. A letter signed by 600 doctors urged Trump to push for the government to be able to negotiate Medicare drug prices. That would certainly result in lower prices for seniors, but it would also result in lower profits for drug companies. And that brings up an interesting debate. How far does all of this go? Do Trump supporters really support the potential for higher drug prices and removing bank regulation that was put in place, in theory, to protect them? Well, one thing's for sure, Trump's win has given the brokerage firms and asset managers a notable boost. So E-Trade, Charles Schwab, and TD Ameritrade were all up double digits this week. Trading has been twice normal, and that definitely means higher profits for trading firms. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
For years now, investors have been pouring money into passive index funds. They've been passing up actively managed portfolios. But the past couple of days, while lifting the indexes, of course, have also spotlighted individual sectors and stocks. Some have bounced, others have been trounced. So will active stock picking trump the indexers in this new political era? Joining us now to discuss is the veteran financial journalist and author and my friend, Ron Insana. Ron, good to have you.
Good to see you,
We
friend.
can both call ourselves veteran now. We've been around so long.
We have been around for many of these financial wars.
Many of these wars. Talk a little bit about, it is 2 days into this Trump interregnum, about the idea that stock picking individual sectors, individual shares, may have a bit of a renaissance because the effects of a Trump presidency may spotlight individual sectors.
Well, and it is the first time in a while that we've seen expectations of macroeconomic policy or federal government policy having an impact on whether it's defense spending, healthcare, finance. All of those industries now are in for either deregulation, lower tax rates, a whole host of things that Donald Trump has talked about as candidate. President-elect Trump now discussing more completely in the interim period, and then likely to act on these things in the first 100 days of his office. So the market sniffed that out right away. Even being down 900 points on the election night in the futures markets, that turned around on a dime.
So there are certain things that he can do in his first 100 days unilaterally.
Absolutely.
There are a lot of things that he can't do without Congress, a lot of things that could get hung up in the courts. So are the people who are making big bets on sectors or individual companies, are they leaving themselves open to disappointment if some of those deregulatory changes are slow or don't happen?
Well, he said in the campaign he was going to roll back 70% of the 20,000 federal regulations that exist. He also can do some of those things unilaterally, and even with a friendly Congress, there's a good chance that whether it's defunding elements of Dodd-Frank, whether it's defunding elements of the Affordable Care Act, although he did make some relatively compromising comments today about what stays and what might go. With respect to trade policy, we'll have to wait and see on that. But, you look at something like the Department of Labor's fiduciary standards rule, it's getting in the weeds a little bit when it comes to financial industry policy.
Right.
But this was the item that forced financial advisors to disclose conflicts, compensation, and also act in a client's best interest by rule. That's going to maybe be the first thing to be washed away. So brokerage stocks have reflected less onerous compliance.
So back to our initial thought.
Yeah.
Does it change the idea that indexing really ought to be the core of a lot of people's portfolios?
It may be the core, but you have to think also about satellite. So let's say he also gets the $3 to $6 trillion tax cut, whatever the size of that package is. And we see that reduction in tax rates. We see fiscal stimulus. We see the economy grow faster, earnings having troughed out 6 quarters in a row on the downside.
Right.
Those start to improve. The general market goes up, but there will be sectors that you want to be involved with, sectors that you want to avoid based on policy.
Right.
So a blend of passive and active probably makes the most sense now.
All right, Ron, thanks very much.
Good to
Ron
see you,
is on.
friend.
Good to see you.
Yeah.
All righty, the vice chair of the Federal Reserve said he welcomes the possibility of more fiscal stimulus out of Washington, something President-elect Trump has promised to deliver. In his first comments since the election, Stanley Fischer also suggested that the central bank has almost reached its goals for maximum employment and price stability, and that it is getting closer, yes, closer, to raising interest rates. Policymakers meet again next month. Billionaire investor Warren Buffett, who was a vocal backer of Hillary Clinton, said it is important that the American people coalesce behind the president-elect. In an interview with CNN, he also said that the stock market will be higher 10, 20, 30 years from now. Newsflash. And that any notion that stocks would plunge if Mr. Trump won were silly. When it comes to Wells Fargo, Buffett says he has not sold a single share of his big holding there since the bank admitted to creating fake accounts. Well, the deregulation of certain industries is expected during the Trump administration, as we were just discussing. Today, we learned a bit more about what the president-elect plans to do with bank rules. Eamon Javers is following the story from Washington. Let's start, Eamon, with Dodd-Frank, the set of Wall Street reforms that emerged from the financial crisis. What can we expect there?
Well, what you were looking at here probably is not an entire rollback of Dodd-Frank, but sort of more rifle shots of individual provisions that they would like to see rolled back. Both the newly ascendant Republicans on Capitol Hill, the incoming Trump administration, and also a lot of banking lobbyists have said that the fiduciary rule, for one thing, needs to be fixed. They'd like to fix the way the Financial Services Oversight Council designates systemically important financial institutions, the so-called too big to fail rule. They don't feel that's fair to the businesses that are being considered as designees there. So there's a lot there. We're also learning that Donald Trump might be a little bit more flexible on regulation than we thought necessarily. The Wall Street Journal had an interview with him this afternoon in which he said that he might keep portions of Obamacare, particularly the very politically popular measures that would allow parents to keep their children on their health care for an extended period of time, and also this idea that you couldn't block anybody with pre-existing conditions from getting health care. Those are very popular items. Trump said that after talking with President Obama yesterday, he's reconsidering and he thinks he might want to keep those two provisions as part of an Obamacare overhaul, whatever he does. So it looks like you're looking at more rifle shots than overall repeal and replace.
Mr. Trump, if nothing else, has been known throughout his career as a deal maker, and so there'll probably be lots of little deals like that one cut. There were also some changes today, Eamon, in his transition team. Tell us about it.
Right. Well, Governor Chris Christie had been running that transition team. That was something that was set up over the summer up to Election Day. It's sort of a hypothetical thing, and it takes less precedence than the campaign itself. Now, though, the Trump folks have said that the Vice President-elect, Mike Pence, will now be running the Trump transition effort. Chris Christie bounced down to a council of executive committee vice chairs. You can see some of them there. Lieutenant General Michael Flynn, Rudy Giuliani, Senator Jeff Sessions of Alabama. Those are the big names, the figures that were out with Donald Trump on the campaign trail, rode with him in the plane, appeared by his side at the rallies. And those would appear this early on to be some of the folks who are in line for the big cabinet positions in a Trump administration, Tyler.
All right, Eamon, thank you very much. Eamon Javers reporting from Washington. Donald Trump has also vowed to renegotiate the terms of the Iran nuclear deal when he becomes president. And as Hadley Gamble reports from Dubai, that is just one policy issue leaders in the Middle East are watching closely.
Well, certainly there's some big questions about what happens next here in the region, but no panic, at least not yet. Of course, first off, the Iran nuclear deal. This was the signature foreign policy achievement of the Obama administration, and a lot of questions surrounding whether or not President-elect Trump will attempt to repeal any part of that deal, and if he is successful in doing so, whether or not that's going to have any impact on the country's ability to produce oil, and whether or not prices could go up. And of course, that would be good news for at least the private sector here in the GCC. Another big question, of course, is whether or not this rapprochement with Iran is going to impact the relationship with Iran and the rest of the Gulf countries. Saudi Arabia in particular, hoping, of course, that they'd be speaking to people that they'd spoken to for many years before in a Hillary Clinton administration. A lot of questions now about whether or not President-elect Trump is going to be as amenable to returning to a more traditional foreign policy here in the region. A lot of questions for them, but also some optimism, as we've seen over the last 24 hours or so, leaders across the Middle East, including King Salman of Saudi Arabia, reaching out to the president-elect to congratulate him. We also heard kind words from Benjamin Netanyahu, the Israeli prime minister. He seemed rather thrilled that there would be, as he called, a friend of Israel back in the White House. So a lot of questions, but even perhaps some optimism here in the region.
For Nightly Business Report, I'm Hadley Gamble.
The co-founder of the food delivery service Grubhub says he did not ask any of his employees to resign if they voted for Donald Trump. Some have said that an email sent by CEO Matt Maloney suggested that supporters of the president-elect should leave the company. But Maloney has since posted a blog saying he welcomes all employees, regardless of their political beliefs. And the made in the USA sneaker maker New Balance is quite literally coming under fire for a tweet related to Donald Trump's trade policies. Aditi Roy reports tonight from San Francisco.
Whoever thought making shoes in the U.S. would prove controversial? But sneaker maker New Balance finds itself in a literal firestorm of controversy, with some inflamed customers burning or tossing away their shoes and posting the videos on social media. The reason? New Balance has long been an opponent of the Trans-Pacific Partnership, claiming it helps foreign manufacturers at the expense of companies that manufacture in the USA. After Donald Trump won the election, a company spokesman told the Wall Street Journal, the Obama administration turned a deaf ear to us, and frankly, with President-elect Trump, we feel things are going to move in the right direction. The privately held company's statement is, in part, rooted in Trump's opposition to the Trans-Pacific Partnership Agreement, a free trade agreement among a dozen Pacific Rim countries that would slash tariffs on shoes imported from Vietnam. The deal does not include China. The Boston-based company has long opposed the deal for endangering the sales of its domestically produced shoes in favor of competitors that rely more on overseas production. In a statement to CNBC, the company says, New Balance has a unique perspective on trade in that we want to make more shoes in the United States, not less. New Balance publicly supported the trade positions of Hillary Clinton, Bernie Sanders, and Donald Trump prior to Election Day. Some customers, however, are supporting New Balance on social media. In response to the negative tweets, one customer wrote, "Not in my family. We all went and bought New Balance shoes," encouraging others to do the same.
One of New Balance's competitors, Nike, has more robust overseas operations and supports the TPP. The company says the deal could create 10,000 new engineering and manufacturing jobs in the U.S. over the next decade. For a Nightly Business Report, I'm Aditi Roy, San Francisco.
Still ahead, how a Trump presidency could affect your portfolio and the stocks you may want to consider buying. A record day for Alibaba thanks to a holiday it helped create. Today is Singles Day in China, a day where people in that country are encouraged, single people that is, to buy presents for themselves. And shop they did, to the tune of nearly $18 billion, the most ever. Eunice Yoon has more tonight from Beijing.
This year's Singles Day isn't only about big sales numbers. Instead, the message from this massive online shopping day here to the U.S. is don't forget the power of the Chinese consumer. Singles Day is an event here that celebrates Chinese spenders. It started out as a small gift-giving occasion for lonely hearts years ago, and then it ballooned into a massive shopping extravaganza that makes it even bigger than Cyber Monday and Black Friday combined. Now, at Alibaba's event, Joe Tsai, one of the top executives at that company, weighed in on Trump's presidency. He said the U.S. president needs to remember that Chinese consumers buy American products, which supports job creation there.
If you're the American president, you have to pay a lot of attention because your job is to create a lot of jobs in American society. And if you don't have Chinese consumers being engaged in buying American products and Chinese investors can't invest in the United States and create more American jobs, then you'd be in trouble.
Separately, rival JD.com said Chinese consumption of U.S. goods is a positive for both countries. Underscoring the importance of the U.S.-China relationship, JD recently partnered with one of America's biggest retailers, Walmart.
Walmart is leveraging off of JD's logistics networks and opened a Sam's Club store on the Chinese site.
To partner with JD to have a flagship store on JD will be very beneficial for Sam's Club because they don't have the reach yet, although they're building out their number of locations.
Walmart's investment in JD is meant to broaden the U.S. retailer's overall strategy to beef up sales online. The Chinese consumer has been playing a bigger role in economic growth both here as well as in the rest of the world. But the uncertainty around Trump's victory and his aggressive talk on China during his campaign is raising questions among many economists who worry that China's economy, already facing a slowdown, could face even further headwinds into next year, which might not bode well for China's consumers. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Sales slow at JCPenney, and that is where we begin tonight's market focus. The department store chain posted an unexpected decline in same-store sales and cut guidance for the year, blaming weak demand for apparel and lower foot traffic. The company did see its loss narrow, but revenue was below estimates. Nonetheless, shares were up almost 4% to $9.16. Meantime, shares of NVIDIA continued to surge today following better than expected earnings after the bell yesterday. The technology company said its results were largely helped by strong sales of its chips used for computer games. NVIDIA also hiked its quarterly dividend by 22% to 14 cents a share. Shares soared nearly 30% today to $87.97. LifeLock may be exploring a sale. Bloomberg says the identity theft protection company is in talks with several groups regarding a potential acquisition, with final bids due this month. It is estimated a deal could value LifeLock at about $2 billion. Shares finished the day up 8% at $19.12. And as we told you last night, Disney reported lower than expected quarterly earnings, with results hurt by weakness in the entertainment giant's sports network, ESPN. But the CEO, Bob Iger, says that while ESPN faces some challenges, he's bullish on its future.
Our outlook for ESPN is very positive. We know we've got the comparability factor in 17 due to the NBA, but you're looking at a category, live television sports, that's generally very healthy. It adopts very well to mobile platforms, and that's where we're moving ESPN. So we feel really good about ESPN. We're dealing with some near-term issues on the sub side, eyes wide open on that, not trying to hide anything, but we think long-term prospects for ESPN are just fine.
And Disney shares rose nearly 3% to $97.68. And now to our market monitor, who has some stock picks he hopes will be propitious during the new Trump administration. This is his first time joining us on the program. He's Andy Caparin, financial partner and advisor at money management firm Regent Atlantic. Andy, welcome. Good to have you here.
It's such a pleasure to be here.
We're delighted to have you. You think that this little two-day rally, it's early, ladies and gentlemen, could be the harbinger of better things to come. You see the possibility of the bull market extending for a couple of more years.
I certainly think so. Bull markets don't die of old age. They die when earnings stop growing, they die when earnings start to decline, and they die when there's some fundamental economic risk. The U.S. economy, we've grown so slowly over the past few years that we're not really at risk of a recession. And if anything, the new reality in Washington creates the possibility for the next leg up. What has been absent from this economic growth that we had over the past few years? It's fiscal stimulus. The Fed has basically been carrying the ball the entire time, and now the Fed is backing away, raising interest.
And we had a profit slowdown over the last year or so, and the market kept moving a little bit higher. Let's get to your stock picks. Interesting here, none of them happen to be specifically infrastructure plays, those kinds of fiscal spending plays. Let's start with Cisco. Why do you like it? What do you see there?
So what's really interesting about the tech sector in general, and Cisco specifically, is over the past several years, American tech companies have been hoarding cash abroad. Now, there's a number of reasons for that, but the single biggest one is we have a punitive tax rate to earn profits abroad and bring them back home as cash. The last time we had...
So people keep the profits overseas?
They do. They wait for a better opportunity to bring it home, and here's why. Last time we had a clean sweep for Republicans in the White House and in both chambers of Congress, one of the things that Washington did was pass a law that would allow companies to bring those profits back home at a much lower tax rate than the statutory 35%. That is not only entirely possible this time around, but actually highly likely. Why is that good for Cisco? Cisco is one of those companies that has stashed tens of billions of dollars of profits abroad. What is this cash going to allow Cisco to do? One, pay a very high one-off special dividend. Microsoft is a good example of that. Last time the Republicans did this, they paid an 11% one-time special dividend.
All right, let's move on to number two, another big blue chip, and that's Johnson & Johnson.
Johnson & Johnson. So another sector that's likely to benefit from a Republican administration is really one that suffered from fears of a Democratic administration. Pharma companies have been under attack by Hillary Clinton and by others in the Democratic Party about drug prices. That's one of the reasons healthcare is so expensive in the U.S. That fear evaporated in a matter of 2 days. You saw companies like Pfizer rise by almost 10% in that 2-day period. Johnson & Johnson is a good play, I think, one, because it's much more diversified. It's not just a pharmaceutical company. They make everything from Band-Aids to drugs to medical devices. So I think it's a better way to invest.
And we got 30 seconds on Northrop Grumman. This one is a bet that the defense spending will go up in a Trump administration.
Republicans in general tend to be pro-defense and pro-defense spending. So it's not necessarily a view on Trump's policies or his priorities, but really Northrop Grumman is a very large and significant defense contractor, and they're likely to benefit from a Republican administration.
Andy, thanks very much. Andy
Thank
Campion.
you.
Appreciate it. We'll have you back. All righty. Coming up, a new mission for some of America's vets running a business. But first, how commodities and currencies fared today. The bond market closed for Veterans Day. Today, Americans came together to honor those who have served the nation. On this Veterans Day, President Obama paid tribute by laying a wreath at the Tomb of the Unknowns in Arlington. During an address, he thanked the nearly 19 million Americans for their service and said veterans offer a unifying example of what's right with the U.S. And on Wall Street, at the New York Stock Exchange, traders observed a moment of silence. Well, 1 in 10 small businesses is veteran-owned. But making the transition from the structured world of the military to the more improvisational one of private enterprise can be a challenge. Nina Gosofsky tells us how a few good men and women were able to do it.
We went up and down a highway, inspecting the roads, seeing if there was anything out of the ordinary.
Army Sergeant Raymond Cayasso went from helping clear improvised explosive devices from Afghanistan's roads to trying to navigate another territory, also foreign to him, the business world.
So just like in war, it's completely unknown.
He founded a company called Film Link Up.
I can send messages to different people.
It's meant to be a social media platform for students in film, media, and theater.
Our main focus is connecting the students with who they need to be part of their crew and those production companies that need their assistance with their media and film projects. I think the hardest part has been continuing to navigate in a sea of the unknown.
But for Raymond's and over a dozen other veteran startups, navigating those unknowns was made easier with the help of people like Brock Bassan.
They have the technical skills and they have those capabilities.
a former military prosecutor himself who now gives legal advice pro bono to veterans who want to start their own business through his New York-based law firm, Cahill, Gordon & Rydell.
We're there to bridge that gap in terms of the legal and business side of things.
What do you think about the schedule? 20 years as a physician in the military, and I retired as a lieutenant colonel.
Linda Brown, who opened a soul food cafe in New York City just a few months ago, was also able to take advantage of those services.
They really led us and guided us through the maze of all of the legalities of opening up a business.
According to the Small Business Administration, nearly 1 in 10 small businesses in the U.S. are veteran-owned, generating over $1 trillion in sales. Veterans are also about 45% more likely to be self-employed than non-veterans.
Veterans have so much to bring to the economy and to the workforce. Law firms, consulting firms, accountants can bring one-on-one technical advice to veterans who are starting new businesses.
Linda's advice for veterans looking to take on a new challenge after transitioning to civilian life:
you have to have a really good business plan, stick to it. You can do it. You can do it. You really can.
For Nightly Business Report, I'm Dina Gosofsky.
Boy, that looked good. All right, veterans were given counsel on everything from drafting articles of incorporation to following all appropriate laws and procedures when setting up shop. Those advising them say who better to know the benefits of hiring the next generation of vets than veterans themselves. And that is Nightly Business Report for Veterans Day. I'm Tyler Mathisen. Thanks for watching. Thanks for serving. Have a great weekend. We'll see you Monday.